first panel discussion is with the CEOs of the sector. And we're going to look at, in this panel discussion, or let me get our panelists on the dais and then we will talk about the topic of discussion. Sri Umesh from Shriram Finance, KV Srinivasan from Profectus Capital, Ravi Modani from One-to-One Finance. Welcome, Ravi. Purvi Bhavsar. Welcome, Purvi. Purvi from Pahal Finance. Prabhat Chaturvedi, right? Yes, welcome, Prabhat. So, for this panel, the topic is connecting traditional wisdom with modern intelligence. I think we can understand the importance of both the ancient wisdom that we have, and India is an ancient country. We can proudly say we have a whole lot of ancient wisdom. And we are a rapidly growing technology savvy, youth oriented economy. And that intelligence, that modern intelligence has a key role to play. So we have questions on 6, 7 topics like management, HR, funding, technology, co-lending, and risk. So I think we can have each panelist take up 2 or 3 topics and share their expertise. May I request you to be brief and speak for about 1.5 to 2 minutes on each question. And time permitting, we can have a more detailed, we can deep dive into one of the topics and take it ahead. So let me start with this question. What has been your experience in connecting traditional wisdom with modern intelligence for driving growth in existing areas of business and navigating into newer areas? May I start with asking, let's say, ladies first maybe? Yeah, that's another ancient wisdom that we have. We push the ladies first, whether they like it or not. I think, at least in the professional field, women have taken up this opportunity. So, Purvi, what do you see connecting traditional wisdom, modern intelligence in today's and tomorrow's ecosystem?
Thank you, Manoj. I always get this privilege of traditional wisdom. So this is one more time when I am always invariably the first one to speak because unfortunately I am the only one on the panel most of the time.
Only? Oh, okay.
Okay. So, when we talk about traditional wisdom, a lot to say. As you rightly said, we are a country full of traditions and a lot of wisdom gathered over so many years. I'll just restrict myself to a couple of points, which is more relevant for the financial services. And I'll just start from, a few things like, for example, traditionally the way we were doing credit and risk assessment.
Okay.
Even when I started my career, the way we used to assess customer, and particularly microfinance about 13, 14 years back when we started, me and my co-founder, we used to visit customer and we evaluated at least 50 different businesses. And we gathered so much of wisdom, right from people who were making kite to tie and dye to the farmer to petty shop owners. So, we understood that so much about various businesses. Unfortunately, our wisdom stayed mostly with us. The problem is with the traditional wisdom is not most of it can you pass it on to the next deserving person because not everybody is willing to learn, and you also are not capable of documenting everything.
Okay.
So, all the wisdom that we had gathered over so many years, understanding so many businesses were really getting lost. But then comes the technology and, the data and then artificial intelligence and a lot of aggregators and a lot of things. So we started capturing a lot of data. We started refreshing that data at certain intervals. And a lot of our decisions started coming based out of more from data. We could create templates. So, the wisdom was not lost. In some form, when we created templates, we could pass it on to the next person saying that you don't break your head. This is something we have already learned. And you can always add to it, but this is something very basic that you must look at. So we could build templates. And over a period of time, we kept on adding a lot of layers to it. For example, a lot of external data. So when you were evaluating farmers or when you were evaluating some small businesses, earlier our wisdom was only limited to what we could see with our own eyes. But then we have now got a lot of pin code-wise data. You go to SkyMet and they will give you weather data. They will tell you, they will be able to tell you what is the pattern of rain, how many, what is the possibility of drought, when the rain is likely to come. A lot of data related to insurance. So we could really top up that traditional wisdom with a lot of external intelligence as well.
Okay.
Which helped us with, building a model which is continuously evolving. I wouldn't say it's a robust final product, but it's a continuously evolving model. And that is where, if you were doing 5,000 disbursements in a month, you could in no time reach to about 25,000 customers disbursement. Okay. Because you templatized, you started putting a lot of data, analytics. Also with traditional wisdom, the limitation...
Purvi, can I ask, let's make it brief. Prabhat, would you like to share what has been your experience in making the best of both traditional and modern wisdom?
I think let's not confuse with our experiences with traditional wisdom. Traditional wisdom, as you rightly said, ancient texts that we have, ancient traditional wisdom is something that has withstood test of time. That doesn't change generation to generation. Modern intelligence is something like how you can analyze data better, how you can predict more data-driven insights, that part. But traditional wisdom is something which doesn't change. And what is our traditional text? We have Vedas, Puranas, Shastras, your Ramayana, Gita, Mahabharata. That is our traditional wisdom as a society, as a country. And Ashtadash Puraneshu Vyasasya Vachana Dvayam. Papaye Paropkaraye Punyay, Papaye Parpidnam. और 4 वेद 6 शास्त्र में बात लिखी है दोए, सुख दीजिए सुख होता है, दुख दीजिए दुख होए. If you trouble your employees, if you trouble your customers, you will face trouble in some form or the other. And we have seen large private banks, mid-sized private banks where people were not treated well and they suffered consequences. We still see some organizations which do that and their share price reflect. We cannot take names here, but you can analyze BFSI industry and see players how their share prices have moved, and you can correlate that with how they've been treating their employees and customer. So that is something which has withstood test of time. We need to combine that. How I can make my employee's life easier? How can I help him with more targeted customer relationship management tools? How can I help customer with more better service tools? Personalized service using technology. Technology should be either saving you cost, giving you competitive advantage, or making life easier for your employees and customer. Otherwise, there is no point in investing in technology just for the sake of it.
You're saying that making it convenient and accessible is the core of modern intelligence.
Absolutely. So, making them happier, making them comfortable. So
sounds good.
If you don't do that, you'll suffer consequences on social media, in your share price, everywhere. That's my take.
It becomes really visible today if you are not treating the customer in the manner he or she desires to be treated. Perfect. Let me come to Ravi. What is your perspective on traditional and modern intelligence?
Thank you, Manojji. I think, my belief is that culture drives economies. It's not the economy which drives culture, right? So I think whatever the traditional culture which we have got, so the basic principles which we have got for traditional wisdom, whether it's trust, empathy, relationship, these are all traditional wisdom which have been there all across for ages. Now, if we can imbibe those traditional wisdom, so if I'm coming from my experience as well, if you are into a B2B or a business lending space and a consumer lending space, there might be different, there might be some differences as well. But having said that, there are certain core principles, which is trust, of course, that's number one. Relationship is, of course, number two. I would believe at the same time, empathy in credit assessment. So with all the technologies in place, the variables are so dynamic. So for example, 2 days ago, there's a flood in, let's say, somewhere in the country, right? So all the data metrics which will reflect post that thing, that has to be looked into dynamically there itself. So it's a blend of traditional wisdom to have an empathy, at the same time see what the technology can play a role into that, so.
Okay.
Yeah.
So that's interesting. So it's traditional wisdom is not just intellectual, it's emotional intelligence, emotional
I think that's
wisdom.
what wisdom is, something which is a subjective word itself, right? So you can't quantify wisdom in terms of any parameter. It's more of an experience.
It's not like that computer chip. Which
I
can
mean,
give you that
you can't have a
intelligence.
data-driven Excel for a wisdom sheet, so.
Sounds good. Very interesting. I think that's great. I think you have all put these two kinds of wisdom and intelligence and correlated them in a good context. Let's move on. Let me come to the topic of HR, since we're talking of people and intelligence. As NBFCs evolve into modern enterprises, definitely they will need new kinds of talent moving ahead. And chances are that there's going to be a lot of competition for this kind of talent. Whether it's a IT or a big tech company, whether it's a global GCC, whether it's an Indian MNC, startup, is it Birla, Ambani's, whoever it is. So let me come to KV. If you'd like to comment on what kind of talent needs will NBFCs face in the near future, and how might they make themselves attractive for such talent?
Primarily, NBFC business is a business of two elements. One is capital, the other one is people. Assuming capital is available, and that is not the point of discussion at this moment, it is entirely driven by the kind of people that you have. The quality, the quantity, as well as the longevity of the people. These are the three factors which are very critical in this current environment.
Okay.
Obviously, you need to have quantity in order to grow, right? Otherwise, you simply can't grow. The quality brings in the additional X factor which determines whether your valuation is going to be 1.5 times your book or 3 times your book.
Okay.
That differentiation in terms of the fundamentals of the business is determined by the quality of the people. The consistency and the predictability of the business, which adds one more little factor into your valuation, comes from the longevity of the people. Because if you have too much of churn in your people, the business practices, the logic, the culture, everything changes. So these are the three factors that you need to really be worried about when you populate your people. Now, quite obviously, people of today, they have a choice. They have a choice of various industries, they have a choice of various functions, etc., etc. So how do you really attract people to your entity and hold them is very important. So you can have a very simple copy-paste thing saying whoever is an experienced guy in the market, I'll poach that person and build my team. Now that loses sight of the fact that your culture, your focus, your ways of working may be a little different than what that person has been used to. So the process of unlearning and relearning becomes much more difficult and painful if you take too many experienced people from the market.
Oh, okay.
That's number one. Number two is that, okay, then you can go to the other extreme saying that I'm going to start afresh, take only college kids and then grow them. That's a very long-term business. I don't know how many shareholders really have the patience for all of that. So it has to be a kind of a mix and match of all of this if you want to get the quantity and the quality right. Now, how to hold them right? That's a big problem. There are horror stories of many NBFCs which have 100% plus churn in their front line.
100%?
Yeah. 100% is not very difficult at all. But how do you then therefore manage them, right? The Gen Z, as you say, Gen Z, they are very much worried about work-life balance, their personal space, their intention to do something, which is going beyond the standard ways of working that we were used to at our young age. So we need to bring in the cultural factors that are also undergoing a change if you want to really bring it in. So therefore, I think building it's not just a question of paying money and then holding on to the people. That's either it is self-defeating or it doesn't really lead to the end result. So developing a good work culture where people feel respected and creating a certain amount of bonding among the team in such a manner that people are able to look at it more as an extension of their family, etc., it becomes very difficult. So the work culture, the kind of training that you do, the way you mix and match different kind of skills, and always give an ability for the people to see into their own future and say, okay, my future is secure here. This becomes such a critical thing for you to hold on to the people. But at the end of the day, it's a challenge. It's a very tough thing. You will win some, you will lose some. The struggle goes on.
Okay, okay. Interesting. You put those cultural and the softer factors as an important part of retention and attraction. Purvi, if I may come to you, could you comment how the women in the country look at NBFCs among, let's say, compared with banks, because banks have always been a very desirable segment to get into. And it is obviously very, very competitive to get into a bank. How do you see the NBFC sector as a whole becoming a magnet for tomorrow's women employees?
Very interesting question, Manoj. I have been working in this sector for 30 years and I've seen a lot of women around me. I think when it comes to NBFC or even for that matter banking, my own personal experience and as an entrepreneur and as an employee has been they always prefer to be in an office kind of a job and not the frontliners where you have to go out, do the sales. So you will find more women who is either in customer service, operations, compliance, accounts, those kind of jobs, and not too many jobs where there is a pressure of target. You have to go out, you have to handle cash, you have to do some hard chasing people kind of a work. So as long as, it's a good place to be in. Even in my own organization, we have a lot of women in the head office. The challenge is to attract people at a field level. Nobody wants to work in the field. In spite of you trying to make policies which are very woman friendly, a lot of things now, when you're dealing with customers, you're working in rural areas, you cannot have very defined timings.
Right.
Or, there will be some issues here and there. You need to deal with those things. That is where I see a challenge. So in spite of our best intention, best policies, and this is not only for my organization, but, banking overall, I have seen that attracting talent in those roles is very difficult. Otherwise, you get, otherwise it is quite good to
frontline roles versus non-frontline roles, is that changing?
It is changing, but not to the extent it is required.
Gotcha.
So you will still have a lot of relationship managers or, branch managers who are
I think that's the strength of NBFCs in a sense, that they are more front-end customer oriented.
Yeah, but you don't get women employees who would want to work in the field, whether it is NBFC or a bank. Bank, it is slightly better because it is still, supposed to be very sophisticated kind of an environment. You are sitting in a very nice office. Not NBFCs have got such great offices, that environment. And, some very basic things. Like, for example, in microfinance, we work in such rural areas that finding one toilet in a place where we are working is in itself is an achievement. Now, if you want to have women employees, you need to provide those basic sanitation facilities. Not that man doesn't require it, but women, obviously, from the safety point of view also. So we have those very basic challenges that nobody ever talks about it.
Right. Prabhat ji, a very brief comment.
Just one comment that between banks and NBFCs, because you mentioned, what I've observed that when the economy is doing well, when the industry is growing very fast, people want to grow, but in the banks probably at some level they feel stuck. They are more open to come to NBFCs who reward better and they get the career growth, higher designations and all. But when there is a looming recession or economy is not doing well, there's a slowdown of sort, there's a flight to safety like deposits. People want to move to banks. That's what I've seen mostly.
That's an interesting observation. Great. So since KV sir, you talked about people and funding, let's now move on to the funding angle. And KV and then maybe Umesh ji, I would like to ask you this question. What are likely to be the new sources of funds for NBFCs as they grow? How do you see that diversification happening? what kind of branding or rating or visibility do you expect the sector will need to be able to attract that kind of funds from India, from abroad?
I think to take your second point to start with, I think the NBFC sector generally has been seen as a poor cousin as far as the financial services business is concerned, as compared to banks and other institutions. So I think somewhere along the line, it is a joint effort between the regulators, the environment, as well as the industry itself. Through their conduct, they should be in a position to establish that the NBFC sector is also something to be reckoned with. And today, if you really look at it, 20% of the MSME funding in this country comes from NBFCs. And overall market itself, we are at about 17 to 18% in terms of the total loan market of the entire country. So NBFCs, therefore, are not something to be sniffed at. Right? It is something which is a significant player in the market, and this needs to be propagated a lot more to say that the sector, as you rightly pointed out, has come of age, and therefore we are really looking at a next phase of maturity and development. That in itself will create a good environment as far as the NBFCs are concerned from a funding perspective. Second factor is that the RBI has been pushing NBFCs to diversify beyond banking in terms of their funding sources. Right? Even today, it's a truth that 80-85% of the funding requirement does come from banks alone. And that naturally has to be diversified out. The ecosystem for that, in terms of the bond market, in terms of the securitization market, the market for trading of PTCs and those kind of things need to be still developed. If you are a good rated entity, AA plus and above, or AA and above, you are able to get a ready market as far as your bonds are concerned or your CPs are concerned and stuff like that. You can even go and take money from abroad for ECBs. But if you are not a AA and above rated entity, which is what 99% of the companies would be, it becomes very difficult to attract funds from anything other than the banking sector.
Okay.
So the one way is that I see the securitization market, which is taking out the entity risk from the security, developing over a period of time. So securitization market over a period of time will become very important for NBFCs to tap into in terms of the PTCs as well as the direct assignment, etc., which is growing, but it will take obviously some more time. The other one is that we have been, as at FIDC, we've been looking for and lobbying with the government and the RBI for creating a refinance kind of a network, whereby just like HFCs, the NBFCs also get some kind of a refinancing from a refinancing agency, whether it is SIDBI or anyone else, so that you are able to diversify your risks away from the banks. So these are all things which are developing and in the process over a period of time. But the struggle and the competition for funds is going to remain, and that will remain a important thing. So as an entity, if I have to deserve to get good funding, I need to be very strong on my governance, I need to be very strong on my risk management practices, I need to be very strong with my people practices and my customer orientation. That is what will give me the advantage. If I shortcut something and then don't look at a 5-year, 7-year kind of a horizon to build the entity, I'm going to face a problem at some stage or the other.
There has to be a clear plan how you are going to leverage, because financial services or bank, the entire business model is on leveraging. So how much you are going to leverage and what is the likely sources for you is something which you need to be planned. If at all you have planned that you are totally going to be dependent on a bank, then your model itself is wrong. So I think the NBFCs need to be very clear when they come into the business, what are the different areas they need to tick in. Like KVS rightly put it, you need to have all these things pre-planned so that you are not stuck in between. The asking for a refinance and all is something the industry will keep doing it to widen the overall supply of resources. But if the company is basically not planned for it, then it has a challenge. That's one thing. Now, the older companies or the companies who are like Shriram, since we are there for more than nearly 50 years now, we have a deposit-taking franchise. And that has really helped us to actually, one part of it we are raising through the deposits. And you also have capital market, you have international ECB market, you have the bank refinancing market, and you have the bank lending on your balance sheet. So these are the 5 broad category we have. And I think the capital market in India is still a place where we are not putting attention into. The NBFC body put together, the way today the mutual fund is popularized and how it is going and reaching to each of the retail investors, making it attractive to invest in mutual fund. The corporate bond needs to be popularized. And that's where I think industry has to play a role, because most of the future requirement of the NBFC will come through capital market. That should come through capital market.
Okay.
And we need to make all different rated companies can still go to the capital market and get investor participate in it. So retail is the only source for us, for NBFC, going forward, not to dependent on banking. So I think capital market is something which NBFC industry have to play a role, other than demanding for refinancing window. That is something which will keep doing it. And I think somewhere down the line, the RBI and government both will realize that NBFCs are playing a very important role in the economy, and thereby a refinancing window would be provided on lines with NHB.
Okay. So if I may encapsulate what you're saying, NBFCs have done a great job on B2C on the customer side, but now they need to do a even equally good job B2C on the funding side. And Shriram has been doing that. Has the fundraising journey for Shriram and for the sector from individuals, from retail segment, has that been smooth, or has there been hiccups in that journey over the, let's say, last 5 years, fundraising from individuals?
No, see, there are enough informed investors today, individuals, and I think the industry body need to take up the task, like the way AMFI has done for mutual fund. The likes of FIDC or industry bodies come together should do it. So then only it will get attention of the investors.
I think that makes a lot of sense. Yes, yes. So NBFC, Sahi hai. I'm just paraphrasing, but something of that nature. Let's move on to another interesting topic, which is risk. So if you look at the post-COVID scenario, that's where things, COVID was an aberration. And if you look at the years ahead, my question to, let's say, maybe we can start with Prabhat. What do you expect, what kind of risks do you expect to become critical in the days ahead? And it is one thing to appoint a chief risk officer or a risk committee, but what kind of leadership, top-level leadership, wisdom or intelligence is required to, have a holistic approach to known and unknown risks? The professional is always someone who deals with known things. A doctor knows about your health, civil engineers knows about structures, but the risks do not always come in on the known highway. They come through unknown channels. How do you see, what kind of risks do you see, and how do you see NBFC sector preparing for that kind of uncertainty?
I think all kind of risks that can go up are going up already, and you have geopolitical tensions, you have economic instability, not only in India and other countries. We're talking about ECBs and all. Those countries are not stable, currencies are not stable. If you don't hedge your bets, then you had it. Credit risk is going up, interest rates are going up. You lend to somebody who planned to pay EMIs at certain interest rate calculation. Now interest rates have gone up, almost like 2.5%, 3%. The same guy may not be able to repay. How COVID has impacted, there is a spurt in unsecured lending. How that has gone to repay secured lending, we don't know. That pain is still, though it's been like 5 years now, I don't think that pain has actually come out very clearly. That's what we heard FM and Foreign Minister both saying yesterday, that these risks are yet to be panned out. So internationally, domestically, what is happening in our neighborhood, it's very uncertain kind of scenario that we are living right now.
Can I summarize from what you have said so far? It's the macro risks that appear to be more of concern rather than micro
Correct.
risks.
So you're not sure what is going to hit you, like COVID. Those are like black swan events, but industry thankfully has withstood that challenge.
Yes.
The NBFC industry, whether it is the customers, the loan processes, the digitization journey, that has accelerated only. So we have already withstood one black swan for which nobody prepared. Nobody knew this kind of thing can come up. So that way we are resilient, and we have that confidence now that at least something of this sort, we withstood Lehman, we withstood COVID. So that gives a lot of confidence. But what is going to hit you next? Something like Bangladesh, something happening domestically, something happening. India did something with Russia, with Iran or something, and some sanctions are imposed on you. Suddenly it can change all of it. So I don't think you can prepare for it, and I don't think risk is a function that can be left only to CROs. It is too important a thing. All the leadership team, all the management committee members, all the senior leadership should be geared towards potential risk. What is going to disrupt you? We had, I think, some consultants keep doing that in various sessions and all. I've also attended. What is going to disrupt your industry? What is the player? Like we have all these examples. Who disrupted cameras? Who disrupted photocopiers? And all those kind of examples. Mobile phone disrupted how many economies? So what is going to disrupt your industry? It may be something completely outside of the domain that you were anticipating.
Yeah, that's true.
So you can never be prepared for risk. You have to be constantly paranoid as a leadership on assessing what is going to happen and how I'm going to cope with it. So there are some things that don't change. Good practices, that is traditional wisdom. Like we heard Jeff Bezos saying that e-commerce is also a very evolving industry and things change very fast. He said, we are looking for things that don't change. Like customer will always look for a cheapest product with best possible quality. That thing will never change. NBFCs like that have to think about what things will never change, and if I keep doing that, then I may be resilient enough to survive the crisis.
That's true, that's true. That's interesting. So that's the safe zone kind of. It's like food. People are always going to need food. Just because there's inflation doesn't mean that people will start eating less. They may travel less, they may buy fewer cars or whatever. KV, would you like to add to that on the risk?
I think he said extremely well, summarized it in a very nice way. I would say that, there are, as you rightly pointed out, there are two types of risks. What you can plan for, what you cannot plan for.
Right.
Okay? What you can plan for, you can use intelligence, data analytics and stuff like that, all the modern tools that are available to plan for it. What you cannot predict, you have to provide for it, in the sense that you need to have additional dollops of capital. So gone are those days when NBFCs used to leverage 6 times on their capital. I think today if you leverage 4 times, I think rating agencies will start getting worried about it. So the safety capital is something which is the only way you can manage uncertainties that you cannot plan for. I don't think there is anything further you can do about it. What I don't know. And I think one should have the humility to appreciate that there are certain things that are beyond your intelligence, and therefore leave it to the question of playing on the margin. That's about it. So provide additional amount of capital for indescribable, unanticipated global risks on which you have no control.
I think everyone points to global risk these days as the biggest challenge. Let's take another topic, regulation. What I see regulation is as the collective wisdom of everyone, of every stakeholder, particularly the important stakeholders, because everyone wants the sector, its customers, its partners, everyone wants, is a well-wisher for the whole ecosystem. And, but regulation frequently tends to say more of don't do this, don't do this, don't do this, this is not alive, this, put additional capital for this, put whatever restrictions, give more reporting for so and so. In general, regulation increases friction, but then it makes the surface more stable to walk. It's like regulation doesn't want you to walk on ice. It doesn't want you to slip and fall down. The thing that even regulators are less sure about is data and how AI would deal with data. So my question is, maybe we can start with Umesh maybe. How do you see regulation shaping up? How do you see regulators, what kind of steps they will be taking to deal with what is known for them and what is kind of unknown for them?
See, globally, if you see, most of the regulators are now grappling with this situation. They don't have solution right now because the development on the technology and the usage of various tools are increasing so fast. Probably regulators always feel that they are behind the curve. And most of the regulators have a challenge that they are also a developmental institute plus regulator.
Yes.
So they get also confused with both the role they have to play. Because if the economy needs a certain credit growth and certain kind of the opportunity being created through the credit supply, then the regulator also has to encourage the NBFC or bank who are there in the system to be participating in the economic activity, economic growth. So regulator tends to have a zero tolerance for failure. That is where I think a regulator gets a little confused and they try to bring a regulation to prevent a failure rather than encouraging the use of tools and the technology available to see that there is a progress in the particular industry. So I think I don't really say that the regulator is wrong or we need to, regulator need to be a little open to the idea. But I think they also have created enough sandbox kind of a situation and they're also working on it. And they're also trying to see that right technology, right tools are being used or not misused. So these things will keep happening. So by and large, I feel that Indian regulators have done a good job. And maybe they have been a little more overcautious in sometimes. But that's how any regulator worldwide will do it. I don't really see Indian regulator as a little more conservative. But that, at the same time, internationally, there will be multiple regulators competing each other and encouraging the various sectors. So that situation is there in country like US. That is not the situation in India. India, you have a single regulator, and that's how it gets concentrated. And they get blamed for anything going wrong, so they'll be a little more careful.
Yes, yes. No, I think India is fortunate because in many countries, the central banks are under pressure from the governments, whichever government is there in power or whichever prime minister or president is there in power to drive the economy in a certain way, which may be good in the short term but may not be good in the long term. I think that's a choice some regulators may not have.
The interference from the government or political leaders is never good for any economy or any country, what I feel. India has been lucky in that way.
Right. You talked about regulators. Sure. Let's briefly, because we're running out of time.
Briefly, I'll say. So, whatever he said is absolutely right. The only good part of it is, last 13, 14, 15 years, last couple of years, we are seeing the involvement of regulator at a very different level. The quality of people have improved. Earlier, we always felt that they didn't know. Now, the kind of people that you deal with, they are, coming from some very good institutes. They are very well aware. And I was amazed when I got an opportunity to meet up with the deputy governor some time back. His deputies were so well aware of every little thing in the market.
Okay.
So I'm seeing a greater involvement also from the regulator, which I have not seen before. They are
Right.
quite updated, they are quite engaged, and they are quite knowledgeable.
Yeah, that's a good point you made, Purvi. Let's come to our final point, technology. And maybe Ravi, you can talk on that, given your background with the FinTech Association. Umesh, I noticed a point when you're talking of regulators playing a development role, that NPCI is a fantastic example of what regulator of RBI has done to push at least the payment side in a very sustained and systematic manner. But Ravi, coming to technology, what is the landscape for NBFCs, especially given cloud, public digital infrastructure, AI as a service, so many things as a service? How do you see the NBFC sector? What should they focus on internally? What should they leverage more of externally?
I think it's a great question because we've been using a word called fintech, right? So practically, which is the biggest fintech? I think a bank is the biggest fintech, right? Because today the banking is totally virtual. The kind of data they manage, kind of the risks they manage, right? So the word called fintech is a widely misused word. A lot of the fintechs are truly technology companies doing financial services, right? Whereas a bank is a true fintech. Now, the core thing which is happening right now, technology is becoming a commodity. So as we evolve, it's getting cheaper and cheaper day in, day out. And there's no value in a typical commodity. Today, there are so many ready-made solutions available. Once you get an RBI license from NBFC, you'll get 20 companies providing you right from the LOS to LMS, right? So that is a commodity to come up with. What is important here is how do you leverage the data which is available? So we have been talking about alternate data for a couple of years. Now it's a digital public infrastructure. As you just mentioned about NPCI, so today I'll give you an example about OCAN or ONDC for that matter. There's a product called GEM-SAI which we have been active, right, which is a data derived from the GEM portal of government, and we do a lending which is a 2-minute SLA sign STB process, right? The smallest transaction which we have done on that is 160 rupees financing, sitting out of Jaipur to a company, to a firm in Andaman Nicobar Islands, right? So this guy was supplying material to a government department in Andaman Nicobar Islands on the GEM portal, and we could underwrite that, do a KYC, onboard it, everything done within 2 minutes. So that's only because of the guardrails which have been done by the digital public infrastructure, right? So right from Vahan portal to FASTags, which we have got, GSTN account aggregator is there now, right? So n number of, and it's evolving day in, day out. But as an NBFC, we also have to look for very, very important thing, which will also be of our regulation and risk, which is the privacy issue. So with this, the DPDP Act coming into play, we have to be very careful how we use technology in terms of the personal data of people, right? So especially the PII data of the individual. So we have to make sure whatever technology, whatever public infrastructure, cloud, wherever we are using it, this is compliant with the DPDP Act. So that is a very crucial role, A lot of things is happening at the back end. So Microsoft is working on some containerization at the back end where the underwriting data does not flow to, the PII information doesn't flow to the underwriter, right? So if you require data to underwrite, you just get data to underwrite. Why would you need a mobile number or email address to underwrite a person? You don't need to require that mobile number or email address to underwrite the person. So those are areas which we have to work upon. Secondly, the public infrastructure is available so you don't have to repeat things. Classic example is UPI. Again, coming from NPCI. UPI was successful because it was a public infrastructure created by NPCI. Anybody can get onto the guardrails and start their working over there. So here also we all have to look into our data which is available, whether GSTN, Vahan, whatever, there are a number of issues right now which are available, and to leverage that, that's more important right now.
Okay. So yes, interesting. There's so much technology to leverage, is essentially technologies and solutions and public infrastructure, digital infrastructure. It's like, I think, going to a supermarket and seeing 50 varieties of juices, 50 varieties of cornflakes or whatever, and then choosing
Adding
the right
to
thing.
AI part, basically AI is, artificial intelligence, another buzzword which is being used right now. It was a blockchain few years ago. Now it's an AI. How much AI will deliver the data? See, it's all reactive, So if there's a flood or something, natural calamity happening, AI can only be reactive. It cannot be proactive.
Okay.
So we have to be making sure that all our technology is robust, which is not reactive. It has to be proactive.
Let me ask each of you to give one point answer to what do you think is the most important technology initiative or direction for the NBFC sector in general. Just one point, so that collectively we have your wisdom. Ravi, then Umesh.
I think digital public infrastructure with account aggregator in place.
Okay. DPI on aggregators. Okay. Umesh, any one particular?
No, I think it is sum of everything. It's giving access to digital itself is a great transformation for many of the customers who otherwise would not have understood the technology at all. Giving them a mobile access for either payment or take services, everything. And this transformation has happened in 10 years. Every Indian customers today have access on a mobile, and everyone has a mobile. So that itself is a change. So I think the digital transformation has created or narrowed the gap of the credit access to many of the entrepreneurs or individuals who otherwise would never have access to formal credit system.
So can I paraphrase what you're saying as mobile is the new highway? Okay. Purvi, your one recommendation.
It would also not be one particular thing because it
But
keeps
make it one,
changing.
man. Make it one. Simple.
From, if I strictly, from Pahal's point of view, I think anything to do with KYC, the kind of validation that has started happening, which has really opened up the possibility of funding more and more number of people. Because KYC was one big bottleneck earlier, which, at least you have e-KYCs and a lot of ways you can validate that along
I'll
with the banking.
paraphrase like I did for Umesh. KYC unlocks the doors. Sounds good?
Yeah. That's
Okay,
right.
sounds good. So KYC unlocks the doors. Mobile is the new highway. Prabhat ji.
I'll mention two things. One is already happening, one which needs to happen.
Achha.
One, digital public infrastructure on credit scoring is something that RBI is already working on, that all these pieces, KYC, verifications, credit scoring and all, can be clubbed into one box, and the financial institution pings it and they get the report to bring the cost down at a scale. Like UPI. So that is something that RBI is already working on. Credit scoring is what I hear from the news and all. Second thing which should happen, because more than the good things of technology, frankly, I'm more worried about cyber attacks and those kind of things and all going wrong. So maybe a digital public infrastructure for protecting the BFSI industry, maybe a sort of cyber security umbrella is something that we should work on. So we have the servers, we have the clouds where BFSI data or things are stored. How we can protect them from non-BFSI attacks or attacks from outside, just wishful thinking, but that is something we should be working on.
Safe and secure BFSI island kind of.
Sort of cocoon for BFSI, it will not be 100%. Even Dettol is 99.9. So even if that is 99.9, good thing is all the banks and NBFCs won't be saving a lot of money from investing in cybersecurity initiatives or these attacks and all. If there can be some sort of umbrella. And maybe banks and NBFCs can partially pay in proportion to their AUMs some sort of fee. But still it will be much cheaper compared to the individual investments that are required to safeguard everything.
So Umesh sir, as FIDC chairman, this is something for maybe Prabhat is indirectly recommending. that FID could consider taking this up.
No, this is good. If a BFSI as an industry and RBI brings everyone together, that itself is a much a better solution so that no, we can all contribute to that.
And you should lobby with RBI. Okay, thank you. Thank you all panelists very much for a wonderful and insightful session.